MMTs, this is the VIX. This is the fear indicator. Back in February when we called for that reversal top, this gapped up and the fear went right up there. When we put the bottom in the indexes, this put in the top. When this fell from the top here all the way down, then the broader indexes down, NASDAQ 100, Comp, and S&P 500 broke higher. Just like everything we're showing in bear and bull ETFs today for long and short. Short of bull, buy a bull, short a bull, buy a bear, short a bear. It doesn't matter. The thing that does matter is that we're right back down into this complacently level zone. That means that when the fear was running higher with all the headlines, the fear came off, and as this went down, we made, so there's no fear down here, we making lows down here. That's where you have less price action volatility as well as down here. We'll be monitoring this very, very careful. The VIX is related to the S&P 500. For several days, as we were tumbling down, we also had a bull rally in play. So when this was going this way, this was very, there was less fear. The fear was coming out. And people were willing to put more risk premium. The public model, now I'm explaining the public model. You MMTs only use this as to how to be long and short in your MMT platform and whatnot. You can clearly see right here that you've come down into this area. When we start fading down here, we're going to see what the markets are relative to the S&P 500. We would be taking a look at the SSO and the SDS, and that will conclude the fear indicator. We'll be watching it going into the April 14th earnings on Google as well. We'll also be watching it with the broader indexes on how they're going to set up and move. We'll be using a tool of both the bear and the bull and the bear ETFs to kind of get some equilibrium as to how the broader picture will play out for the MMTs and what their intraday price action volatility as a market maker will be. I will conclude the VIX right now on a daily at complacently low levels and less fear, which is also a good thing for the bull. The lower that it stays, well, then you don't want to be shorting a lot. You don't want to be shorting until you break higher like that. This is when the shorts work. And when it goes down, you want to be long the other side of the market, SMF, MMTs.